Gold and silver, a few rare standouts to the upside. Oil, though, trending lower. Copper touching that 8-month low. Let's get more. Jonathan Barratt from Commodity Broking Services in our Sydney CBD Bureau. Jonathan, gold taking off. You need your sunnies to kind of not be wowed by its glister right now. Where are you seeing the next move?
Well, it certainly, Carson, was a very aggressive move last night. It seems that more people are switching from euros into gold, and you can see where gold is trading, particularly against the euro and also the Swiss franc. So there seems to be obviously that switch from currency into safe haven gold, and that's why we've seen that move. To add to the move to gold, you've seen an increase obviously with what the big gold trusts, and a lot of people just for that safe haven moving into the precious metal, and at the rate it's going, I think it will test those highs. That 1250, 1250 and 1255. The key is to see more news that will enable it to break through those important areas, and you really need to see something concrete come out.
Well, we've got the ECB meeting this week. We've been hearing that they really need to come out with something, I guess, tangible for markets to cling on to kind of just trump what governments have been saying. What are you likely to be believing they'll say?
Well, I think, see, the Euros or the Eurozone governments have all been working towards these plans, these austerity measures. We see them, they come out, then the market absorbs it for a couple of minutes and then decides to put risk aversion trades back on. I really think it's, in a funny way, the market is willing itself into a double dip, because when you see a lot of these economies starting to come off the drip of the stimulus packages, they're really trying to find their own economic growth. But the investor sentiment always concedes to be quite negative, and as a result of that, any sign of concern, risk aversion trades go on, and obviously commodities aren't the flavour, but certainly the only one is gold and silver.
Well, you do just have to believe that this inevitably is going to filter through to China somehow. We talk about, you know, Germany's exports taking off. There's got to be a buyer. Do you believe it's all that quite as simple as a seller being at the other end?
Well, I think, it is an interesting thing at the moment, because the numbers actually in the States, barring the unemployment, which, mind you, I felt was encouraging given where the economy was, and I think the market took it as being quite bearish. But the numbers out of China, I think, are going to be very, very crucial. Now, remember, we've got industrial production towards the close of the week in China. Now, they're going to be very crucial as to how people see economic growth in China actually occurring. So I think that'll be the litmus paper test for a lot of us as to whether or not some of these commodities can remain where they are, or if indeed they're starting to go a lot lower.
Just a question and clarification. When you took that jobs report as encouraging, given that you needed to strip out the public sector component because of the census, what was really encouraging?
Well, the way I looked at it is when you see unemployment at, say, 10%, right? And then you see the numbers actually starting to come low to 9.7. Now, that's not saying it's going to 10.5 or 11%. It's actually saying it's coming off. Sure, the expectations that we all had were for a very, very large number. Now, it didn't come in, but the number is still on the right side of the ledger. And I think the market really has decided to will the numbers down, will the economies down, rather than look at, say, hey, there's the US economy, we're weaning it off its stimulus. We're not going to get these brilliant numbers, but let's look at the positive side. We've got to be optimistic about what is actually occurring.
Well, is a headline number telling you what's really occurring?
Well, it is, but remember also unemployment's not a leading indicator, it's a lagging indicator. And I think that's what's actually happening. When you look at some of your manufacturing orders, that's all encouraging. When you're looking at credit sector growth, that's all encouraging.
Well, is it all that encouraging? Because consumer credit might have expanded in April, but it fell in March. That's not a trend in my book.
It's not a trend, but it's also at the time where economies are trying to find their own feet. They're trying to find their lows, and I think to me that's the important thing, because you know, we've had a lot of stimulation into the economies, and we've really got to make sure that these economies can actually stand by themselves. And to me, that's the testing period at the moment. We're going through that test. Can the economies stand by themselves without the stimulus packages, right? Or do we have to continually need to put stimulus into them? And that's obviously what we're seeing in Europe, but in America, I think that's the testing point at the moment.
All right, OK, for the rest of this week, Jonathan, and some key influences, you talked about China there just a moment ago. Aside from the raw numbers, tell me about the copper price, because is that still regarded as a reliable barometer?
I think it is. Copper is always a reliable barometer as to where the economies are going. Well, we have to have a concern because copper did have a limit down day just yesterday in Shanghai. So I think people are concerned that things are slowing down in China. The key that we've got to work out is how fast are they slowing down. Because what we're finding is that if China continues to slow down and the US can't pick up to placate the demand from each economies, then you will find that some of those commodities, particularly copper, will come under pressure quite a bit.
What about this idea, though, that mining companies did scrap new projects? When back in 2008, the price fell a significant margin, 54% weaker. Are we now looking at potential supply constraints?
No, not at the moment. Not at the moment, because we've gone through this period of just stimulus demand for commodities, if you put it that way, where the stimulus packages came out, commodities all of a sudden went higher, copper went higher aggressively, and now we're coming to that levelling period. I don't think we've got that supply concerns at the moment.
Not even in copper concentrate, because at a conference in Hamburg yesterday, apparently there's going to be a deficit of 500,000 metric tonnes.
Look, I don't see it as, I mean, that's in one particular area. But overall, if China starts, remember China is the #1 consumer. If China slows down, that's a concern for everyone, okay? And then commodities will come under pressure. And I think that's the focus which we've got to look at, particularly when we come into the end of the week, when we look at that IP out of China.
Jonathan, value your insights. Thanks as always.
Thanks, Carson.
All right. Jonathan Barratt there from Commodity Broking Services.